All right, so I wanted to take some time to sit down and try to explain this LPCN trade, just so that there's some material here and I could try to answer most of the questions people have been having. So basically, I just wanted to start off by showing that really this stock has been around for about 5 years, publicly traded, has not performed very well over the course of those 5 years. If you are one of the original investors, you've lost most of your money to this point coming down. And in part, this is because they've had two rejections from the FDA for their testosterone product that they're trying to get approved. They have a couple other things in clinic, but this is the main thing that this trade revolves around. So basically, trying to kind of explain it a little bit further, I'm going to zoom in on the chart and we're going to take a look at what things are happening over the course of 3 years. So basically, around this time in January here, they had an advisory panel. So the panel voted against them, basically 13-6, saying that the benefit risk profile was worth having the FDA approve it. This was January of 2018. While the FDA doesn't have to follow along in terms of taking the recommendation of this advisory panel, it's a panel made up of physicians within this field who are considered key opinion leaders, and they often follow in their footsteps. So if you look back right around 2018, you see it here and you also see it here. You see a significant drop after this panel being right around in maybe the threes or so, trading down to 150s. And then subsequently, when they were rejected, you see this drop here right around in May-ish where they actually had their PDUFA date. Now, subsequently, they've been working on, over that period of about a year and a half, working on and trying to get approval. They refiled again, where I think this is where you see this big bump and you start to see some spikes up here, trades off a little bit. And then right around here, you get June time for a November PDUFA date that they had. So if you can tell, you go from 150 to all the way up to 350 at the highest, maybe trading around 3 when close to the PDUFA date. Again, though, they had failure. Second time they've had their drug rejected, and this stock dropped, cratered pretty far, going from like 250 down to 50 cents. Now, in terms of what I've done with it, I was part of this run up here previously. I traded, but again, I don't stay involved in these decisions, and this is why, even with the second time around, they still found issues with this drug. So here we are really for the third time around, and just zooming in now on this 3-month chart that sort of looks around the time when I started building my position. So, unfortunately, right after the news came out right here, you see this big spike here is where news kind of comes out that they're filing again, slash the FDA is allowing, they're able to file again. The FDA is okay with the data that they have. They don't have to run any other big trials per se. And so that they can file again, they can have expedited review. And basically, from the time of end of February to the end of August, it's about 6 months. That's the time of a PDUFA resubmission usually. And so it's big spike, sells off. And then, unfortunately, I really started buying around here. And I started buying around here because this was around the time that they raised some money. Yeah, so right here. So right around February, end of the month, basically, in 2020, they sold stocks to equivalent about $6 million. This was dilution, maybe 20% or so. That's important. That comes up important later in looking for targets for LPCN. But basically, they diluted their stock about 20%. And, this is why the stock ultimately traded off. Now, I've seen plays like this before come back up and really start to run again because remember, if you look back just this past November in 2019, the stock was trading around $3 before it had a PDUFA date and before it was rejected. We're trading at 60 cents now, and really this is what the trade revolves around. If people are feeling that this could be valued all the way up here, if approved, it could be even more theoretically, but this is pre-approval being rallied around $3. Even after being diluted about 20%, you should still be able to reach at least back towards those levels in the 1 to 2 range, if you're trying to value this company appropriately. Now, a couple things have happened since then. What we see here is a massive sell-off with the COVID virus. But really, since the nadir of the stock price, we've steadily kind of chugged back up. It's doubled since coming off its low of about 30 cents up to 66 cents now. And if you look at it really from an indication standpoint, there are a couple deeper indicator things you can look at to see, for day traders use. I generally don't use these too often, but you see the clear indicator here of these two lines crossing. That typically is an indicator of a stock being able to breaking out, coming back up into positive momentum. This is also RSI is also a momentum tracker here, and you're getting to the point where it could potentially be oversold. But my guess is it may build a base around here, may come back down into the 50s, but it seems like there's some good support around 55 cents. And that makes sense because it's around the place where they sold when they raised funds back in February here. They were selling shares for around, I think it was 59 cents and then some warrants for 53 cents, exercisable at 53 cents. So that's really the hope with this. We know that they had their complete response letter previously in November of 19, but it was trading much higher at that point. Additionally, too, you see in March, when it was sold off significantly, we had some insider trading here around 30 cents. Additionally, in January, even before they did their raise, they were buying in the 30 cents, 45 cents, likely because they had a good idea that they would be able to submit again. Looking further, this was looking at someone that put out a price target of $7. This was last springtime before their PDUFA date. These price targets really don't mean a ton, but it's just something that's good to know. This was talking about why the panel voted against them originally back in 2018. But basically what we're looking for a run up into August. Their PDUFA date is the end of August. It is, to be exact, August 28th. It's about 3 months and 2 weeks and 4 days away. This is hitting right around the spot where I like them, kind of in that 3 to 4 month range, where we hopefully will begin to see movement, especially in that 2 to 1 month range for the stock. Really, I still think this is a buy here. I know it's run up a decent amount since we were down in the 30-cent range up to 66 cents, but my hope would be that we could get back towards $1 even. It seems like an easily attainable goal just given where we just were. And I'm hoping that the market will ultimately kind of pick up on this too, and we can be ahead of the curve and kind of ride it up into that dollar range. Then subsequently selling, of course, not holding through the PDUFA. I don't believe in this product. I'm not sure, even if it is approved, that physicians will prescribe it and sell it. I'm not sold on sort of its long-term prospects, but I think we can kind of take advantage of the hype here and some money. Thanks for listening.